Okay guys, welcome back. Welcome to my channel. Anybody that's new here, we cover stock technical analysis. We anticipate where the markets are heading. We try to make some money in the process. And anybody that's been following my channel for a while knows that I've been really my thesis on this channel for about a year and a half or so has been a deflation inflation thesis, basically talking about seeing, when we broke trend on the S&P 500 back here, here's your decade-long bull market trend. This is a weekly chart. We broke that trend line back in December of 2018. And then when we broke that, October of 2018, and then when we broke that, I said, okay, now all we're going to do is backtest, and then we're going to go into a bear market. And I was looking for, a market crash or a bear market. I wasn't really necessarily looking for a market crash like this. I mean, this is just straight down. Really, I was just looking more for like a bear market where we just kind of work our way lower and have crashy days. But I wasn't expecting a huge, just straight down. I was expecting it to move down over time. This just happened to be moving down in basically no time. So that's the play is, okay, we were looking for a bear market, and then we were looking for the Fed to come out, do a bunch of stimulus, cut interest rates to zero, and then start to kill the dollar. And if you go back to some of my earlier videos, I always talk about the Fed's boxed into a corner. They've got basically, there's only a couple ways that we can get out of the hole that we're in. One is to grow our way out, and I just didn't see that happening with the demographic issues that we have around the baby boomers and whatnot, and also just the debt that we have. Two was to inflate, which is print a bunch of money and kind of murder the value of the dollar, and that could help us inflate our way out of our problems. Or three was to deflate and just let a natural market deflation happen and kind of default on our issues. I didn't see that as the highest probability. I saw really the Fed being, probably going to do the easy way out, which is to inflate, and that's sure enough. That's exactly what we're seeing now. You can basically see, anybody knows the headline. Here it is: Federal Reserve just pledged asset purchases with no limit to support markets. So basically, the Fed is going to be buying everything, it looks like. I mean, I've seen student loans and corporate debt, and they're just going to be buying everything. They're probably going to have to get permission from Congress, which they probably are going to get in this asset relief bill that Congress is going to pass. Maybe that's part of it. But the Fed is basically, and they have no limit either. They basically said they're going to buy as many bonds as they have to not allow the bond market to fall. And so the bond market is, falling. Here's the corporate bonds now starting to kind of pop up a little. People front running the Fed, basically buying it, or maybe this is the Fed buying it. I don't know if they have permission yet, but maybe they do. And then here's Treasury bonds. This is just the Fed in here buying. And at this point, it doesn't make a lot of sense to be a buyer of bonds because they're literally telling you that they are going to inflate the dollar. And so these bonds are going to just be losing purchasing power over the duration of their time. A 30-year bond, I mean, I don't know who would want to own, I can't, no natural buyer would want to own a 30-year bond when it's literally just going to lose. They'll pay you back in 30 years from now the amount of dollars that you paid for the original bond, and those dollars won't be able to buy you nearly as much. So the interest rate doesn't keep up with the real inflation rate. So what does that mean? Well, that means that gold just had a explosive day today. So that's really what I want to talk about. But let's look at the markets real quick. Again, here's our level, 169. This has been just a trader's market in the last little while. Look at all these moves, this chop action, but the moves are big enough, the swings are big enough where it's been, really good price action for day trading. And, I've been taking advantage of it pretty much every day. Did well again today. Today I was long, I was buying long. And if we go to we can look at the 5 minute here, excuse me. 169 was my level, and as we started to hit it, we would ramp up, drop back down to the level, pop up, drop, undercut it a little. Once we came back up to it, ramped up. So every time that we hit that 169 level, I was getting long and catching these rips. And just, I was just selling into them, basically, just looking for quick kind of rips off that 169 level, and it just continued to work all day. Now, here's what we got, and here's what I'm looking at. If the Senate comes out, let's go to the hourly. If the Senate comes out, or Congress or whatever, if they come out and pass this stimulus bill, the markets they're probably gonna rip. I mean, as long as it has as much stimulus in it that I keep hearing it's gonna have, just a good amount, I guess, then the markets are probably gonna rip. We're probably gonna gap above this downtrend line. Here's your downtrend line. I expect us to gap above it. And that's the thing. I don't expect us to trade above this line intraday. I think they're going to have to gap it above. So maybe what they do is actually have another selling day, and then the following day, big old gap above to trap, to trap bears. And that's what I'm looking for. So as of right now, I just went home again flat today. Entered the day flat, took some trades to the long side, took my money out of the market, and then closed the day flat on the markets. So 169 is kind of the level right now. They're just holding that, and then we've got this downtrend line right here, and this is an hourly chart. So that's what I'm looking at. And if we gap above it, and maybe we have some sort of bear market rally, then I would say up around 200 is going to be your area, your best entry for establishing a new short. And there are some levels here at 192.60, 185.60. Those are other levels where I think we'll get to, probably easily get to 185 on the gap day. Maybe it's a gap and go where they gap it and then it rips higher to 185. That's probably the first day. And then we'll see. We'll maybe consolidate and work our way up to this 200 level. That's what I'm saying as of right now. So I think that's what plays out, but I'm flat, so it could go either way. I would just put a higher probability that we have some sort of a gap higher and then a move up. Again, that's really that. And then the other one I want to point out is gold. So let's look at that, because gold had an explosive day. Okay, here are my gold charts. I just keep these charts up. Gives me a good idea of what gold's doing. Let's look at the dollar here. This is what I got up on the board. So the dollar's still holding strength. I mean, here's your hourly chart, and the dollar has moved up. We've established a trend line here, and we're just kind of consolidating right now. So you've got this top right here that the dollar put in, and we're just holding there. So we'll have to wait and see. Now, keep in mind that this big sharp move in the dollar came when the markets were just plunging and everyone was just selling stocks. Basically, they're just hitting the sell button and then that's it. They were scared. And so they weren't buying anything because the markets were just tanking. Everything was tanking, and so it wasn't necessarily a time to jump in and buy and deploy some of those dollars. So they were just sitting in the dollar, keeping the cash in their brokerage account or whatever. And that put a bid underneath the dollar. So there's been a lot of demand for dollars. And, maybe people are afraid of the banks. I don't know. But ultimately, the dollar's held up pretty strongly. Now, I think that's just the initial move on this panic sell that we've seen. And I think the dollar actually starts to get weaker as gold starts to get stronger. But again, we'll let the charts tell us what it's going to do. All right, let's look at I'm not sure what happened to my gold bullion chart. So let's look at gold bullion here. Here's gold bullion. Big strong day today. 1570 is going to be our resistance on the weekly. So we're pretty much just ran right into resistance. Here's your weekly chart. And rolling back, 1570 comes back from the trading range back here in 2012. 2013, and so that's 1570 on the weekly, and you can see we ran right into it. So we'll see what happens with gold, whether this level holds Or was this just a initial kind of plunge in gold because the dollar held strength and everyone was just selling gold to raise dollars to pay margin calls? That's kind of my thesis, but we don't know. We should start to see now that the margin calls, a lot of them have been met, and if stocks, aren't going to sell off for a while, or at least not sell off as strongly. If you don't sell off as strongly, then you're not going to get people getting margin calls. People will have opportunities and time to get out of their positions, and so if you don't see that kind of just fall with the bottom falls out and the stocks just go straight down, then maybe gold starts to move higher as market participants realize what the Fed's doing with how much money printing they're going to do. It should ultimately cause inflation, and you should see people rush to gold to fight that inflation. So 1570. Let's look at some of these miners here. Barrick Gold. This one's interesting how they sold it down in the last hour, really the last 20 minutes. They sold it down a little bit and it closed down slightly, but ultimately just still closed, still was up 6.5% on the day. Looks like we've got resistance. I had this level right here marked out, but I don't know how much I like it anymore. So we're going to leave this one right here up, which is going to be 1803. So we'll just have to wait and see where we trade out at. But I think we're just in this trading range right now, 1803 at the top. You've got a gap up here as well, but, we're just trading sideways. So ultimately we need to see it break up or down to figure it out. I think we move up, given that we had this big flush out move right here and the buyers just stepped in. This showed me that, if we approach prices down in this range, there's an aggressive bid in this miner. So I think we move higher. For now, I don't know. It's been really choppy, so we need to just see what's happening. But I think we go higher. AEM, this one, same thing. They sold it down in the last few minutes. We can look at the 5-minute chart here, sold it down a little bit. But this one, going back to the hourly, we've got support right here at 32. Let's see where I get that support line. Yeah, that just comes back to here. And we have resistance right here at $40. So you could even possibly mark out this as support. Give you guys a little shorter term target. Let's just say we have support. Let's see, this was your flush out move right there, but we could say we have support right along this trend line on the hourly chart, and we have resistance right here at 40. This is a rising, what do they call these? Rising triangle. And typically the higher probability is they break to the upside. So whether that happens, I don't know, but that's what this pattern is looking like. Not a whole lot there. AUY, this is one I had up. I just kind of kept it up just to kind of see what's going on here. Let's look at the hourly here. Yeah, I don't see anything really. I'm just seeing consolidation, just this pattern where we've just been chopping sideways. I'm going to move past this one. This one's interesting, Sabina, silver and gold. I added to this. I added a little bit today, but I also added a little bit the other day. But if I roll out to the daily, here's your support. You can see we held that, and you can see on this recent plunge, we came right down to it. Not quite there, pennies away, but we basically hit at 51, and support was at 50, or basically at 50. So it was about a penny off, and then it started to move higher. So this is just continues to bounce off this downward support. Ran down and tagged it, So we should move up, and we'll just have to continue to watch that. That's your support line right now. Actually, that was dual support. We broke that support right here though at 63, where we got that back here, and moved higher. So still looks good. Nug. This one, I actually took a very small position in this JNUG today. And really it's just based off of the price of gold bullion, the bullish action that we saw here in gold bullion. So I took a very small position in JNUG, looking for this thing to have some sort of a pop. Let's look to see where this thing might run to. I mean, this thing just collapsed. This was your support at 30.81. And let's expand this line here. Yeah, your support was right there at 30.81. We broke and just absolutely collapsed. It started to have a kickback rally, but then failed again. So what am I looking for? Well, let's go to the hourly to try to break down where our profit targets might be. This one, yeah, really looking for this thing to get up to 12 bucks. That would probably be the easiest short-term profit target right there. So if we get a rally, we'd probably run up and tag this right around there. So that's where I'm looking for this thing to go, and that's a ways up there. So you know, you don't need a large position on this thing. If it's you know, I've got 150 shares, I believe, so it's like 600 bucks. And if it runs and it does get up to 1200, you know, you're looking at a 200% gain roughly. So from price levels that we're at now, so you know, I mean, 600 to 1800, not a bad gain. You know, again, this is very high risk, so, and it's very volatile, so you don't want to have a too large of a position because you're going to get big moves of 20% down days, 20% up days. You'll get shaken out in one of these moves. So better to keep it small and let this thing just kind of work its way to your profit target. Silver. I grabbed a small position in this as well. It looks like it was holding support. Silver actually outperformed gold today. It was up more than gold. And that's kind of what I'm looking to see. You know, the whole sector was moving up, but silver was outperforming. So silver was acting how it should act in that kind of an inflation move, because that's what today was about. Today wasn't about economic growth. It was about the market pricing in future inflation. And that's why we saw the gold, you know, the precious metals moving up, and we saw silver outperforming. So I took a small position in SLV. Nothing major, but looking for it to fill the gap as the first profit target. Here's your support right here, which is now resistance. So looking for silver to run up and fill this gap up around 13.45. That's really the first move there. And after we do that, or if it does that, then I'll have to reevaluate it. But for now, I'm looking for that, and I'll probably take some profit up around there. That's it. Here's your gold futures. Kind of keep an eye on that. We're moving higher. Gold futures are moving higher so far, so we'll see if they continue through the night and what the foreign markets do on gold. But fundamentally, gold is set up to continue the bull market. Technically, gold is still in a bull market. Just going back, I've got all my flags marked out here. I don't take them down, but ultimately you have higher lows. Okay, if you want to go back and look, here's your bull market in gold. All right, here's the bottom of the bear market, and then you have higher low, zooming in, higher low here, higher low. This was an equal low, so that's okay. Equal or higher is still keeping trend, and we have higher highs. So now we should work our way over time. As long as we don't break below this low right here, we should make our way up and make a new higher high, ultimately closing above 1680 and probably heading towards 1900 in gold. I think that's where we go. So that's it for the video, guys. I'll get this one out there. Anybody see anything interesting, let me know. Post that in the comments below. I'll take a look. Any kind of setups. I think we're probably going to get some sort of a sustainable rally whether that's a few days or a few weeks. I think we're probably going to get that here pretty soon in the markets. And I'll be looking to, you could look to trade it to the long side and then cycle back into shorts. That's really the play. And so if you don't want to cycle, if you don't want to take it to the long side, then we'll just continue to watch the short entry, because I think there will be good levels that you'll be able to cycle back in on shorts. The other thing we do have to watch out for, though, is the Fed now has gone pretty much nuclear. So they're just going to pump so much cash. I mean, they're pumping so much cash that, we'll have to watch that, because even though the market's in a bear market, the Fed has the power to pump as much money as they want, so they can prop everything up, and they just have to do it at the expense of the dollar. So we need to see that kind of dynamic play out, and if the dollar doesn't fall, then there's probably some more money printing and some more downside to come. I don't think the bear market's over, but at the same time, with the Fed in play, now we have this, kind of a three-dimensional dynamic. We have to keep that in consideration, and that's just the fundamental side of it. So we need to let the technicals show us what they're going to do, but at the same time, we need to watch the dollar, we need to watch gold, and we need to watch the markets to understand where the next play is. So keep you guys posted as I see things, as more information and as the charts start to firm up. I'll keep you guys posted. Till then, give me a thumbs up, appreciate it, and I'll catch you guys on the next one.